I'm Eric Johnson, Managing Director of our Healthcare Advisory Services, Transwestern. Well, the good news is we are growing in this industry, in the healthcare industry. We have a lot of dedication from the senior leadership, from the top down in each of the major cities to increase their exposure to healthcare. I think the important thing is to know that we build our business just like Transwestern's done in its core business throughout the country. As the base of the pyramid, which is a solid foundation, is through third-party management and leasing. That helps us weather all the cycles. And through the third-party management and leasing of medical office buildings, we can add on the other layers of service lines: development, medical tenant advisory, investment sales. Then we get the full referral pattern within each service line. And so we have certain markets that are stronger in each of those service lines than others, but I think as a whole, our leadership is dedicated to expanding that and making our healthcare presence much stronger nationally, because our clients are much like the clients we have in other sectors, and they demand a high level of professionalism and a national presence. And so the larger our national presence is, the better we'll be served in picking up new business and expanding this particular service line. It's certainly a hot topic. It's a topic that has impacted the healthcare industry, the real estate industry that services the healthcare institutions and physician groups. The total impact of it is uncertain at this point. However, there are a couple things that have come from it that we've seen on the forefront. Hospitals are having to become more efficient. They're having to cut costs. The physicians are having to do the same. This is impacted because of the diminishment of reimbursements between each of those groups. There's still a lot of uncertainty, but those are the two things we've seen. There is some stability that's set into the market in the sense that the hospitals have now been forced to employ the physicians as opposed to compete with them, and that's something that has stabilized the market somewhat, because one of the negatives in our industry has been the institutional capital coming in, investing in real estate, and the credit has been based on that of the individual doctor. Now, through the employment of the physicians by the hospitals, it's strengthened the credit of our tenant base. And so now you have the hospital credit versus the tenant as the credit. And so we've seen more institutional capital come in because of that, and that's shored up one of the weaknesses, I think, within our investment peer group. We see it faring very well. Investment capital continues to flow in to the investment of medical office buildings and hospitals. We've weathered the storm very well. Cap rates have held firm throughout the economic cycle we just went through. Rental rates have held firm. There hasn't been many concessions within our medical office buildings, regionally or nationally. I think we've also seen vacancy rates stay low. It's stabilized occupancies. And that's something that's caught the attention of many investors that were on the sidelines, some foreign capital, institutional capital that has not traditionally been in our industry. And so as you look at medical office buildings and the ownership structure of that, traditionally our investment sales activity has been dominated by the REITs, private and public REITs. Today it's shifted a little bit in that they still have a pretty healthy domination of around 40 to 50%. But we've seen more foreign capital come in, certainly recently, and that used to be around 1% of our investment sales activity, and today it's around 13%. So that's all happened in the last 12 months, which is a very interesting trend that we'll keep our eye on, and we have seen it here in Houston as it relates to the product that has come to market in the last 12 months. So that's interesting. I think it's also significant that private equity, as it relates to medical office buildings, has traditionally been a relatively low component of our buyer, around 30–35%, and has been over this cycle, but that's certainly picked up in the very recent past. So we see that as something that may continue to dovetail in and end up at about its average of about 40% towards the end of the year, as many of the life insurance and pension money gets back off the sidelines and focuses on a healthcare component.